Okay, I'm Tim Merel from Digi Capital. We're an investor and advisor for mobile apps, games, and mobile tech. Now, the games industry is undergoing significant transformation disruption on a global basis. The most interesting parts of the market are mobile and online. And as you'll see from the chart behind me, there are a lot more players there than you would have expected even 2 or 3 years ago. The market's changing very rapidly. It's very dynamic. There are a lot of players from the giants like Tencent in China through companies here in Europe and in America. Now, this disruption is being driven by mobile. And what you see on this chart is McKinsey's view of the world, where they've looked at the 10 largest disruptions from a tech market on a global basis. What you see is that mobile internet is far and away the largest disruptive technology they're expecting in the next decade. Things like Internet of Things, cloud, renewable energy, don't even come close. So the interesting thing is that in terms of the scale of the change and the disruption, we're seeing epic shifts in value away from technology, media, and telecoms incumbents. So if there are corporates in the room who aren't active in mobile internet already, it's worthwhile looking there on a global basis to understand what's coming at you. But also huge growth for early-stage companies. We're seeing multi-billion-dollar companies, whether it be the Kings or the Supercells, Uber, Waze, KakaoTalk, or Line from Asia. There's huge growth for early-stage investors. Now, what's driving all of this? A few things, but the major thing is the level of investment in the infrastructure layer. You've got very established mobile tech stack. All the software's there. It's all laid out. It's easy. You have lots of charts going up and to the right in terms of investment and growth into devices, so smartphones and tablets, but also mobile broadband subscriptions on a global basis and data. Now, this all looks great, but the infrastructure layer is very much the land of giants. In the last 12 months, we've already seen around $1 trillion of money going into the infrastructure layer. But growth is slowing, so where it has been in double-digit percents, it's now going into the single-digit space. So if you're an investor looking for growth, you need to look at the level up from that into the value-added layer. So again, whether that be apps more broadly in mobile or the games piece. So let's look within mobile and within the apps space around usage and revenue in particular. And what you see is that games dominate usage, particularly for tablets, where they're around 2/3 of usage today. But that usage is changing. We spend a lot of time in Europe, in the States, in Asia, and I'm on the advisory board of China Joy World Mobile Game Conference. And when I was there earlier in the year, it was fascinating to see the way that one part of the media industry had been killed within 12 months by mobile. Now, whenever I travel, I always like to go on the underground or the metro system, so you see how the real world works. So last year, when I was there during China Joy, lots of big billboards on the underground platforms for the various Chinese games companies. This year, almost none. They're almost completely empty, because where here people look at their phones and their tablets a lot, there they do a lot, but this time people literally aren't looking up when they go into the stations. So the outdoor advertising industry in relation to public transport in China has been killed within 12 months by mobile. So those shifts are enormous. Now, when it comes to the countries where this is big, well, it's the States, Japan, China, UK, South Korea. When you look within the app's revenue space, you see a couple of really interesting things. The first is, today, mobile games account for around 70-odd% of all revenue for apps globally. So if you're an investor into the value-added space, into the mobile app space, and you aren't involved in games, then you're missing most of the market today. But the other interesting thing is actually the non-games app space, particularly if you look from, say, the more device-intensive apps like games, where most of the value is actually on your phone or your tablet, into more cloud-intensive, more SaaS sort of spaces, things like Waze and Uber, where actually you've got an app, but most of the value is out in the cloud somewhere. And that space is where we see huge growth potential, which is untapped. So the fact that games are dominating mobile app revenues today, we think is not going to last. We think the rest of the app categories will grow with it. So looking more within games in terms of where are the interesting spaces, what we're finding is that when it comes to the sort of gameplay that is, in terms of the different sectors, everybody's moving towards more communal gameplay, so competitive and collaborative, as well as more free-to-play. And one of the really interesting spaces there is the over-the-top platform space, so KakaoTalk, Line, WeChat, WhatsApp, and so on. And in some markets, pick, say, Korea, what we're seeing is 6 of the top 10 games in terms of the app charts are all on KakaoTalk, which sounds great because you've got a consolidated messaging platform, the app discovery and game discovery is curated, so rather than being one of hundreds of thousands of apps, you're one of 30 or 40, which sounds wonderful. So for the platform holder, it's great. They dominate in that market. For a developer, it's a different story, because already you have to pay Apple or Google or the App Store in the various Asian markets their cut, 30% or more. Now, if you want to be on, say, KakaoTalk, you pay the platform holder, you also pay the messaging app their cut. So in some cases, we're seeing developers where they're seeing maybe 20% of their own turnover as revenue. So you have to get to very high volumes to make that work, and that market, that model, is coming here very, very rapidly. Now, the reason for that is fairly simple. It's economics, in terms of the collaborative and free-to-play aspects of doing things. And what we're seeing are revenue uplifts of 10 times or more in terms of average revenue per paying user, which is the number that really matters, coming out of that more collaborative gameplay and the free-to-play approach. Now, in the West, it may be slightly different now, but that change is already here, and it's going to get bigger. So let's talk about overall revenue around mobile in particular and usage. Now, already what we're seeing is the free-to-play, when it comes to downloads, it's already the dominant model. There's no surprise there, and we don't expect that to change soon. But let's look at the actual revenue around the apps and game space. Now, last year, this was a $15 billion revenue market, so already sizable. The forecast, as you can see from here, and this is from Gartner, is that this market will grow into a market over $70 billion by 2016. So 5 times revenue growth for a market in 4 years. Now, we've been involved in these markets for about 20 years, and we've never seen a market this big growing this fast before. So for early stage investment, for us, that's very exciting. For everybody in the audience, if you're thinking about the mobile space, it's a very interesting space to be. Looking within that, what you see is that from a revenue perspective today, paid apps, paid games, are actually the majority of the revenue market. But going forward, that's not what we forecast, that's not what we expect. We expect free-to-play, freemium apps to be the dominant part of the market from a revenue perspective. So again, if you're a corporate, if you're an incumbent, and you aren't playing in these spaces, you aren't looking to Asia, you aren't looking to free-to-play, you need to be doing it very quickly. And if you're an investor, there's huge opportunity. In terms of the game space specifically, we've seen it split into what we call value and volume markets. The value markets are basically the old markets, console, subscription MMO, and so on, and some of the older geographic markets where you have higher average revenue per user, but you also have far higher investment costs, lower growth, lower profitability. It's not a bad place to operate, but as an investor, it's not very interesting. The volume markets, and this is particularly driven by Asia, are where you see, in some cases, millions or tens of millions, or in some cases even hundreds of millions of users in terms of some of these apps and games in particular. You see much lower revenue per user because it's generally a free-to-play model, but the profitability far higher. We're seeing companies with 50% plus profit margins, in some cases growing 100% plus year on year. So very interesting market. Economically, if you're running a business, very interesting market as an investor. Geographically, it's an interesting story, and particularly for Europe. Actually, a question. In terms of people in the room, how many people here are actually involved in mobile in any way? Hands up. Okay. Of all people, keep your hands up if you had them up before. How many of you went to either GMIC or China Joy in the last 12 months? Okay, nobody. You people need to get out more. If you're not looking at the Asian markets, our view is that the creativity and innovation in terms of Europe and America is great. Can't beat it. And I think most of the Asian economies would agree. When it comes to science, the science of making money from mobile, in our experience, China, Japan, South Korea, they're 18 months to 2 years ahead. So if you aren't sending your people there to learn what works and what doesn't, you aren't bringing those lessons here, then by the time it gets here, you'll get disrupted rather than profiting from it. So in terms of the growth, it's online and mobile, particularly mobile driving growth. But geographically, Asia is already dominant in the mobile and online spaces. The growth is coming from there for a couple of reasons. The first is scale. There simply aren't enough people in America, for instance, to compete with China, where you need very high volumes and low revenue per user. but also that understanding of how to make money from mobile in particular. Now, for investment and M&A, what we're seeing is a significant gap and therefore a significant opportunity. M&A this year in games has already hit more than $5 billion, so a new record. It's been driven by some headline transactions like Supercell, which you all will have heard of, but far more transactions coming out of Asia, which I'll come back to in a second. The flip of that is we're seeing investment in games, and part of this has been driven by some unsuccessful IPOs, although, interestingly, actually, the IPO market, as always happens in games, is now coming back. It tends to go through a 2-year cycle, and there have been 7 IPOs in games in China in the last 12 months, 2 in the last month. We're seeing that investors, particularly early stage, have been shying away from games, and mobile games in particular. So there's huge opportunity, there's huge growth, there's high M&A, you're getting IPOs, and yet investors are not taking advantage of it. Now, we like that a lot because we like unfair advantages. So investing in mobile apps, investing in mobile games, investing in mobile tech, that helps us. But for the people in the room, it's an opportunity which, if you can, you should take advantage of. So what I'll finish on is just, again, thinking about the M&A market and how things are consolidating and where that consolidation is coming from. Now, again, hands up, how many people here are running startups or early stage companies? Okay, a few of you. Okay. Now, again, keep your hands up. How many of you have any relationships at all in China, Japan, or South Korea? Right. One down the back. Well done, you. Oh, one down the front. Well done, you. Now, you should be ashamed of yourselves because 8 of the 10 biggest M&As in relation to the games market this year, Chinese, Japanese, South Korean buyers. Last year, same thing. Mobile apps, similar trends. So the acquirers that you're thinking about buying your companies, I mean, of course you're all IPO, you're all fantastic, but if you don't, if you're thinking about a trade buyer, you need to be building relationships in Asia. And for those of you who are familiar with the concept of guanxi in China, it takes a long time to build those relationships, 12 months, 18 months, 2 years. So if you're thinking about exit, you need to be thinking about Asia. The last thing I'll say is, in terms of the incumbents, the people you think of as being at the top of this pyramid, it's not the case that it'll stay that way for a while. And any technology, media, and telecoms players in the room, I'd suggest you think similarly. The changes we're seeing being driven by mobile are so extreme and so rapid that a lot of the players at the top of this pyramid will not be there in 3 to 5 years' time. So if you're building a business which people will be buying in 3 to 5 years' time, get to know the growth companies. Get to know the players who are doing 100, maybe 200 million revenue, but in 3 to 5 years' time will be multi-billion companies, because those are your acquirers. So I guess in the round, what I'd say is mobile, Asia, and have a good time. Thank you.